129 days ago, I brought you the TIA trend reversal signal. This was March 2024 when Bitcoin hit 74,000. At the time, we suggested Bitcoin was not going to go above 74,000 for a considerable amount of time. Just last week, I brought you the same signal that is happening on the stock markets, now down 4.5% on the S&P 500. So is now the time to pack it up and call it a day? Let's dive into the data, the charts, and of course, the cycles. You've reached your home of macro cycle analysis with me, Jason Pizzino. Today, we're going to cover Bitcoin, cryptos, the stock markets, and the real estate cycle, in particular, looking at those interest rates as the announcement comes out next week. So don't go anywhere, hit that like button. Let's go for 3,000 likes on today's video to help out that algorithm, and hopefully more people can see the content. Guys, there is a link in the top of the video description. TIA Premium is on sale right now. There it is. I'll leave it in the pinned comment as well. More about that later. That's all you'll need to do there. Let's kick it off with the agenda for today's video. So first time in 16 years, we have 5 more trading days to go in the month for the stock markets. And of course, the highest volume trading days for Bitcoin will be those same 5 days as well. I've got the real estate cycle to get into, new all-time highs across the board. This is primarily focused on the US, and I've also got some data here for Australia. The interest rate myths. Then we get into the stock market corrections after we saw some pretty significant bullish data in the last couple of weeks. Seasonal pattern and market sentiment, Bitcoin market sentiment, the correction, Ethereum and Solana. A nice interesting one here with a comparison between the two. And we'll have a discussion on the altcoin season potentially coming up later in the cycle. Now, I know most viewers come here for the Bitcoin data, so I'll get into this in just a moment, but I think it's vitally important that we have a look at the traditional markets to assess the health of the financial landscape. So let's kick it off with some of the data here before I get back into this correction that's going on for Bitcoin and what we've just seen on Ethereum as well. For the stock markets here, now nearing record persistence of risk on behavior. So I could spend another half an hour going through all the data here, but let's just recap some of the headlines and some of the major points here. The majority of core indicators have been in risk on mode for 180 straight days. So you can see it here. That's the green. Risk on meaning people want to throw more money into the markets. 223 was the previous high number there for risk on, as the stock market ran into that peak of January 2022, essentially from the COVID low into that January peak. So that's nearing the longest streak of such behavior in nearly 25 years. Other periods of very persistent and high optimism didn't necessarily lead to losses, but upside expectations should be muted. So that's what we're currently seeing on the stock market. Now, one particular line caught my attention: persistent and lopsided. More troubling is just how the risk on behavior has been. It has averaged more than 80% over the past 150 days. Other times it got this high since the financial crisis. Further short-term gains were eventually erased. And that's essentially what we are seeing at the moment. The short-term gains seem to be getting erased. Well, at least we can confirm that now. The gains from June 17th, so now over 5 weeks, have basically been completely erased. And you can see it going back to 2010 on this particular graph here. The optimism's high. You can see it starts to roll over. Optimism's high. It rolls over again. Optimism's quite high through that period and then rolls over. The main thing here, further short-term gains were eventually erased. Now on the chart, you can see the volatility in terms of the move to the upside and the corrections. 4.5% now over the last 8 or so calendar days. This is typical of the winner's curse phase, so leading into the peak here, a couple of years. This is for the real estate and economic cycle, so not necessarily the stock market. The stock market could keep grinding higher after we see a peak in the real estate and economic cycle, looking for a rough date around 2025, maybe late 2025, maybe early 2026 as a peak in the real estate and economic cycle. But as I said, stock market potentially higher. Now, as we continue to grind higher, and as you'll see with those returns on the stock market, absolutely crazy over the last couple of months, you're going to see significant corrections along the way as well. Almost stuff that is there to freak out the masses, because they'll be looking at the corrections being bigger than anything they've seen before. But of course, the move to the upside is also bigger than they have seen before. So, as you see the early stages of the bull market, as we're just looking at here, you've got good gains, but then you've also got corrections. But as things start to speed up, you probably will see corrections that are greater as well. So that just increases the volatility in the market. That's part of the winner's curse phase. What we're also seeing in the winner's curse phase, this last push to higher prices, are new all-time high prices. Don't worry, I've got the US as well. The current median house price and changes. Now you've got Sydney at significant tops here. That's an average price for a home in Sydney, 1.66 million. Price from peak is an important one to note here as well. 0%, meaning it's at a new all-time high. Brisbane, Adelaide, Perth, all at 0, meaning they're at new all-time highs. And for Brisbane, nearly 1 million. Adelaide, just short of $1 million as well. Perth, $850,000. So it's important to know which cities are moving in that direction. Canberra's obviously coming down 11%, Melbourne down a little as well, and that's why you have to understand which cities or towns you are investing in. As for the US, new all-time highs. April is the most recent data that we have from the Case-Shiller Home Price Index, now sitting at basically 330. The previous top for 2022, when we had that big boom basically across the world, everyone trying to get out of their cities and buy up whatever they could to avoid any of those lockdowns, that was at 319. So it is significantly higher now. You can see there 3.5% from that top. There has been a low, the market's grinded higher, we had a few months off, and then it's basically continued to push in the same sort of trajectory as we've seen out of the 2023 low. Note the orange line in the background. This is the interest rates. The calls at the time, which was what I was talking about on the channel, interest rates can increase, they can decrease, they can pause, and the market, the real estate market, can continue to go up. All we heard at the time, basically from almost everyone else on the planet that analyzes markets, were saying if interest rates go up, people can't afford it, the prices have to come down. Absolute BS. Absolute BS. Never believe any of that shit unless you do the research, do your own research for yourself. Take what I've got here, potentially take it away and go through it so that you can believe in it yourself, or find some errors to it if you wish. I'm just presenting you with the analysis that I've gone through and done, and going back over the data that we have here. You can see the blue line is the real estate prices. The orange line are interest rates going up or pausing or coming down. And you can see the pause here. So you've got the bottom, and then prices continue to climb from there. Guess what? Interest rates also climbed through the teens, the 20 teens, and then paused, corrected, paused, and then shot up, and real estate kept going up. So really, really important to note how this market can continue to work. You can still see higher prices, and that is going to be positive for the stock market and for Bitcoin and cryptos until it's not. And when is that time going to come? Well, I've looked at this before in terms of the cycle, and we'll continue to follow up with this on the channel. However, if you want to get into this in more detail, weekly calls, discussing with the community on how you can build your own trading plan, your own investing plan, and what to do in the times of corrections, TIA Premium is the place to go. This is on sale now. Subscribe to the weekly report and you'll receive that discount code to jump on board and join us for our next weekly live stream. Stock markets, fear and greed has now dropped to 41. Same fear as we saw on April 26th. Interesting to note, here is April 26th. Here is the current price. It is now up 7% since that previous time of fear. And you basically have the same market sentiment. People are fearful, and it was fearful on the way up. That total move on the way up, here is a low. Now let's move it to the top. About 15% here for the S&P 500. I've got some really interesting stuff when it comes to the stocks themselves and how unsustainable those sort of moves are, which is why you do need to see corrections, and these corrections also work out within seasonality. But nonetheless, S&P 500, 3 days down. So we're just going to get to this signal here. couple of days up. Our green's on top. That's the swing indicator here. Turn on your settings, go down to show bar type. Now, if you want this particular indicator, you can find that right here, Gann Swing Indicator, 7-day free trial. It'll help you out a lot with your trading and investing to find these particular signals. This has to come in from a very significant top. I don't use it within different trends. You can see it all through here. I don't use it in that period. I know a lot of people try to do that. I see comments. You have to test it for yourself on the markets that you use. Okay, so we've got 3 days down, and now this correction has continued on. Higher volume as well. Note we have just pulled up at the 50%. So in terms of is this move over, is the bull market over? I still don't see any signs of that happening. We've got plenty of support to the downside. Should it break down from where it is, at 5,500 now, you've got the support back there at 5,300, those previous tops. And then you've got the lows at 52, and then the next low here at basically 5,000. If all of that breaks down, then you've still got the support back at the old all-time highs at 48. Invalidation, where I would get scared that the market's over. I mean, scared, whatever you want to use for that. Fearful, hey. A breakdown of that all-time high price, roughly around 4,800 points. Now, in terms of a percentage, that is quite a significant way down. So let's have a measure of that. That's going to be about 16%. The market would have to fall 16% from the top to get to that breakdown point underneath the old all-time high. And as we've looked at before, 16% corrections don't happen all that often. From memory, roughly around sort of 3 to 5 years, once every 3 to 5 years. And we've seen a few already in 2022. So it's not like it can't happen. You're just throwing the probabilities not in your favor to think that it's going to happen more often than the data suggests. This post was very timely. 17th of July, looking at how the markets were continuing up into a peak of roughly the 17th of July. So where is that peak? You can see the peak here is on the 16th. Look at that. The following days, it corrected from there. At this seasonality, July tends to peak right around now. This was posted on the 17th. Just looking at historic data, that's all. The next half of the month typically has a correction. Now, the orange line is obviously subdued here. There's not much of a correction there because it didn't go up very much in the orange line, that is. So that's the average over the last 70 years. July 2024 has had a pretty significant rise to 3 to 4% from the start of the month. So naturally, you're probably going to see a pretty significant fall towards the end of the month if there was going to be that fall. So it seems like, well, now we can say that the fall is on, and so it's probably going to be a more significant correction than what we have seen in the past few months. So that was known weeks ago. We talked about it on the channel. You can also see with this one here, this one's moving towards the NASDAQ, and the 16-year first time that we will probably see this in terms of a correction. Where are we now? We've got July. Look at the green line here. Sitting president running. Well, that's changed now, hasn't it? We don't have Joe Biden running anymore. Essentially, you've still got a correction in the green. You've got the all election years, so you've still got a correction there. Slight correction in the black, and the blue is also lower when it closes than where it opens. So there's the aggregate. Obviously, we'll continue to follow up with that on the channel. For many, that probably sounds like bad news. The markets aren't moving. What's going to happen? We've got all of these fears coming out yet again, as I've talked about now on the channel for years, where the markets continue to climb a wall of worry. Bad news, markets put in a higher low and continue to go higher. That's what a wall of worry is. Here is some good data news. Basically, don't give up on the bull market yet. S&P 500 returns after a greater than 10% year to date at the middle of the year. So June 30th, right? If you see that, 10% for the first half of the year, typically the full year is going to be green. That's got a 100% hit rate. I'm not sitting here saying it's going to happen exactly the same. That's pretty good odds. Maybe this year is the year that doesn't happen and you get a negative year after the first half of the year being up. These look pretty sweet to have at least some sort of gain in 2024, where we will end the year higher than where it opened. So for the NASDAQ now, this is the 16-year streak. You've got back to 2007. That was the red month on the NASDAQ. Now that went on a streak of green, green, green. You can see it all the way up to where we currently are in 2024. And it's currently sitting in a red month. So this is potentially going to be the first time since 2007 that July ends up being red for the NASDAQ. It would have to climb back from here over the next 5 trading days, about 3.5% to just get back to where it opened, to at least neutralize the losses over July so far. Now, if we take a little look at the shorter term timeframes here, we've got the low happened in April to the top. You can see the market has corrected almost back to the 50% level, 19,048. Now, if it were to keep going from that point, we've got plenty of support to the downside. Lows here, highs here, that's 18,700, that's 17,100, and the 50% level at 17,500. So plenty of support should the market continue to correct. And could it continue to correct? Well, let's take a look at some of the largest stocks in the stock market, which have also seen this signal that we've talked about for BTC, this trend reversal signal. Apple, red, 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 from its all-time high, tried to recover and has then corrected again. To the downside, I'm looking at support levels at roughly 207, the 50% level at a nice psychological number of 200, and then the previous all-time highs before Apple broke out on the, this was the AI pump, when they announced they were doing something AI-based. They had the big move from 193 to 220. Those levels are $197. So plenty of room to move to the downside and still maintain a bullish structure. That's all I'm looking at here. Now, in terms of the signal that I keep bringing up, this 3 days down, the red triangles here, 3 in a row from a very significant turn, in this case, the all-time high here. All this is suggesting is that we'll potentially see a top for longer than the previous tops. You got the top here. You can see that that was only a top for roughly 20 days, 13 trading days. So 20 calendar days, 13 trading days. This time, I suspect it's going to be longer than that. So I don't think we'll see a new top within 20 days. I could be wrong, but just looking at the probabilities based on this signal that we've brought to you from TIA for months now, and it's basically continued to forecast the markets pretty damn well because we've gone back and tested it over decades of data on particular markets. You can see that it continues to work time and time again. All these largest tech stocks make up the NASDAQ, so naturally you'd expect the NASDAQ to remain underneath its all-time high as well. Amazon's also corrected. It's gone underneath the previous tops here at roughly 190. So, the correction is on at the moment. Underneath this short-term, very short-term 50%. Now I'm taking it out to a longer-term 50%. Down to around 159, 160 would be another key support level should this continue to correct. Microsoft has been another major leader. It's hit yesterday, dead on the 50% level, $427. Maybe it bounces from here, which are the previous tops. If not, it would have to look to the next 50% levels. Nvidia, same deal as well. You got the 50% down at 108. So basically all this is showing is the trends are down, but there is still plenty of room for support for these markets. And then you just have to wait that little bit longer. So as I've looked at before, it doesn't pay to be fearful in a macro bull market. What I'm trying to show you here is the markets are still bullish. And if you get fearful at these times, you sort of miss those lows, as we've talked about now for years, where you can see the market continue to climb higher. Your banking crisis, your Middle East crisis, another Middle East crisis, the debt ceiling crisis. There's always some sort of crises, and the markets have been going higher. Yes, eventually they don't, but we're looking at this overall time frame here for when we need to be a little bit more concerned. So the NASDAQ is potentially breaking a 16-year record, 16 years of green Julys. In the case of BTC, it has found some strength from its July low and just looks to be putting in a shorter correction here. I put a post out yesterday on X. I suggest going to look at that. We'll continue to look at the ETF flows to give us signals for lows and highs. And literally just the last couple of days, we saw the biggest ETF inflow since the June top here. So that was another trap. The most amount of flows coming in for ETFs essentially have been calling a lot of these tops along the way, whether they're intermediates or larger ones like the all-time high. And then from those lows, you're seeing a lot of people selling out almost at the exact bottom. So really important to note, I think, when it comes to ETFs, and basically a great contrarian indicator. So If people are talking about ETFs and how it's so positive that there is a lot of ETF inflows coming in, to me, that's a warning sign. Maybe you take it as something different. Of course, we can all trade the markets how we wish. But yeah, just looking at the data, at least over the last 4 months, I would not be listening to those sorts of people that get hyped up on ETF flows coming in, as in, money's coming in. Yeah, it typically happens at those peaks, right? So that leads to the fear and greed. You get a lot of greed at those peaks. So far, Bitcoin's only had a very small correction here over the last couple of days, and the greed level is still relatively high here. You got 68, and that's today, and then the day before was 69. So although we've come out of these extreme fear, maybe it's going to take a little bit more just to wash out this current greed. And as I've talked about, there might be a little bit of volatility in this market should Bitcoin see a quick, swift move to the downside, maybe something towards $64,000 or $63,000. Should that happen, still plenty of support there. That's the major 50% for the entire range. And the low comes in at 63,200. All I'm going to do is turn off these so we can have a clearer chart. And then should it break down from that, you've got a level there at 61, and then those previous tops at 59, which was part of the video that I put together over the last couple of days. You don't want to see Bitcoin get below those particular levels based on the data and the analysis that I went through in those videos. So rather than go through it again for 20 minutes, go and check that out. I'll leave a link to it at the end of this video. So that's it. There are the levels down there. Let's have a look at some of the altcoins here, ETH and Solana. This one's the big one, looking at the comparison between Ethereum and Solana. You can see the little arrows down below here. If this chart goes higher, then Ethereum is going to be outpacing Solana. If this chart goes lower, then Solana is outpacing Ethereum. Essentially, what you can see here is there's a number there, 1859. So basically, 1 ETH will buy you 18.59 Solana. When it was this high, 1 ETH would buy you 26.7 Solana. So that's what it means by ETH going up and down. This looks like it is going back to test these lows at roughly 18. If that breaks down, there's no other support to the downside. Therefore, Solana would be the crypto to hold if you're only going between the two, meaning that you're going to get better gains from Solana when this thing breaks down. One Ethereum would buy less Solana. It's as simple as that. So let's have a look at the ETH chart here. Just yesterday, ETH broke down 4%, took that 50% out. Still support down below here at $3,200. So it can still remain relatively bullish should it hold up above 3,200. Again, that level, if it breaks under 3,200, it's starting to look just that little bit weaker because it wasn't able to put in a higher high here. So it really does need to hold up roughly around 3,200, get those closes, get that consolidation and start to push higher. That doesn't mean that Solana has to fall. It just means that Solana might put on bigger gains if this is to fall, but ETH and Solana can both go up in price. It just means Solana would do bigger gains. Solana, on the other hand, is holding above its major 50% down here, and then the correction range, that's that 50% here, and then the move from the low to the high, there's the 50% at 153. So it's basically above all three 50% zones, and I guess attempting to consolidate here before it goes on its next push towards the 1 week swing top. So trying to take out this level here at about 185 to 190. That would put even more strength in the Solana chart. The strength is starting to shine through for some of these stronger altcoins. And if you do want to learn how to trade them, now is the time. Get on board with TIA Premium while the sale is on. And you can join our traders and investors over in TIA Premium. Plenty of profits being made here, 46%, 35%. Anthony crushing it, 117. Plenty of gains here. As part of the community, you can chat with all of our members about their trades so you can get a better idea of how people can get into the markets and make profits successfully. Subscribe to the free Crypto and Economic Report. Sale is out now. Link in the top of the video description. And I'll see you guys back here at the next video. Take care and peace out.